Good afternoon. I have the privilege this afternoon to introduce another dynamic plenary speaker with a great story, Tom Glassick. Tom is an insurance public policy consultant with a professional career focused on public policy issues relating to catastrophe risk management, flood risk management, and the National Flood Insurance Program. Tom served as counsel at Sutherland, Aspel, and Brennan, where he advised insurance clients on the application of all insurance-related Dodd-Frank Act provisions, including those pertinent to the Federal Insurance Office, the Financial Stability Oversight Council, and the designation and ultimate supervision of significant non-bank financial institutions. From 2011 to 2013, Tom was the General Counsel of the District of Columbia Department of Insurance, Securities, and Banking. He served as Senior Counsel to Chairman Barney Frank at the U.S. House of Representatives Committee on Financial Services and was the leading legal advisor on all insurance issues in the Dodd-Frank Act. Tom holds a Juris Doctorate with honors from George Washington University Law School and a Bachelor of Arts from the College of William and Mary. Please join me in welcoming Tom Glassick.
Good afternoon. I'd like to thank Catholic Charities for bringing me to Florida, but more importantly, for getting me out of Washington this week. I spent part of the morning trying to pay attention to the things that were going on Capitol Hill, and I'm much happier to be here with you. Zach and Catholic Charities asked me to come to speak about the National Flood Insurance Program. It's kind of an oddball. It's a federal program that was created. Let's go. Or no, it wasn't. Come on. Okay, there we go. And this is one of my favorite things about the National Flood Insurance Program is I believe is the last Great Society program that Senator Johnson signed into law. And the communication letter from the president to the Congress asking them to do this, the second paragraph starts off with, "No great society can," and talks about the flooding issues that were happening in the United States. We had periods of flooding in the 50s and 60s. It was getting increasingly worse, and the private insurance market was just not at a position to risk manage at that level at that time. We'll talk later that the private market is getting better at that now. So as part of one of the many Great Society programs that came forward was the development of this National Flood Insurance Program. The program, I love to say, it is 1968, so it's 2 years older than me, thank God. No, it's one of my great things working with other flood people. I'm like, are you older than the program or younger than the program? And took a little bit of getting going. 1968 is a start. We didn't really see people starting to participate until the early 70s. And in 1973, to make that happen, Congress mandated that people who have mortgages participate. And that's why so many of your your community members are, you hear people saying, I have to have flood insurance, or I have to have this. It's available everywhere, every community that you could possibly be from, and I went through the list, and you're very geographically diverse, but it is available in all 50 states. There are 22,000 plus participating communities, and again, we'll talk more what a participating community is, but this is the only insurance program kind of in the world where the policyholders, or at least their elected officials on a local level, have to do things to be able to get the access to the flood insurance program. And there have been a couple communities over the years that have opted out, and I obviously do not wish to be gleeful, but when those communities have flooding and they come to their members of Congress, and what I have to say, your community opted to not have this. So you're not entitled to disaster relief, you're not entitled to this, but I'm really glad that you decided, we're a democratic society, if you decided you wouldn't want this aid, but don't come forward now and say, oh, we wish we'd done it. The program is about $5 million. There's policies in every state, but it is really heavily southeast. Florida is obviously the largest participating state, followed by Texas, Louisiana, all the ones that you'd expect. But it stresses me out because we go through this every year, and I know I saw, post-snow riverine flooding down the Mississippi, down there in the middle of the country, and I'll have people coming to me, and I'm like, I know that there's only 7,200 policies in Iowa. So when flooding goes through in the spring, I feel bad. It's horrible, but one time, this didn't sound callous at the time, we were just flooding, and I was like, I'm flood insurance, I'm flood tomorrow. Flood today is disaster relief. So we're, without trying to sell insurance, and I understand a lot of the communities, the participating communities, are not affluent participating communities, and it's a financial consideration to do this. But insuring for disasters is something, is the easiest way to prepare a community for after disaster. But we all don't like paying for insurance, but we often like the outcome. Oddly enough, flood is something that never got into American homeowning thought processes, in part because the federal government has been in the space as long as it has. And as soon as you start mandating someone to have something, we'll not even touch the ACA, as soon as you start mandating people to have something, then it becomes this challenge of, why am I being mandated? Why is the government telling me to do this? Sometimes the government suggests things that are wise. The program is the largest property casualty insurer in the country. It's $1.3 trillion in coverage outstanding. That is a big number. So, there are 50 insurance companies that help the federal government administer this program, but there's no one out there with 1.3 trillion sitting out. It does end up becoming a social issue program, though, because, as I tease, we are the only insurance company with 535 board members. And, when a particular community has been impacted, and a member of Congress wants to take care of their particular community, sometimes the policy outcome might make sense for one community, but when you apply it around the nation, it becomes odd. And the one fun thing about flood insurance, no one ever anticipated this as a lunch topic, did you? The fun thing about flood insurance is it makes strange bedfellows. You can never quite figure out where the alliances are going to come, and in the world of politics. And I had a great teacher, as I mentioned in the introduction, Chairman Barney Frank. Kind of led me through. I did the insurance stuff. He figured out the members of Congress and the coalitions that come together from places that do not get along politically on a regular basis, but all of a sudden are flood bedfellows. It is fun. So we have a bill offered in the Senate by Senator Menendez from New Jersey and Senator John Kennedy from Louisiana, and I don't think they have anything else in common other than that they're both senators. But when we get to flood insurance, it's an interesting mix. As you're interacting with your communities, just the base facts, what's available, you can always, there's more insurance, but it's only up to $250,000, or unfortunately, the outstanding value of your mortgage, because this is really more of a housing finance focused program. And people with mortgages have to have, and their mortgage provider requires it. So the law says, outstanding balance of $250,000 or outstanding balance of mortgage. We were just talking. It makes my head hurt that once you've paid off your mortgage, you get a letter from your servicer that says you no longer have to have flood insurance. It just makes me sad. People are associating it with a government mandate rather than how are we risk managing. So as you're interacting with people, and I ask every member of Congress I talk to, like, what should we do? I'm like, you should not speak in your home jurisdiction without encouraging people to at least consider flood insurance. And as you're doing risk management, both prospectively, hopefully, and then after a disaster, as people are rebuilding, considering this and at least having the information available, is it's such a frustrating, and you're on the ground. What's it like when you're talking to someone and their home's gone, all their stuff is gone? If you can tell them that someone's going to give you, not give you, you've paid for it, you can have $250,000 and that money is available. And with the way things are going, we had a wonderful experience in Harvey. Companies with FEMA's driving it, companies were able to give out, like you could take a picture of your house, text it into your insurer, and get a $5,000 wire transfer. God, I sound like an old man, wire transfer. Get a electronic funds transfer, and have that money in 36 hours, 48 hours. It's such a, and you know what it's like to have people trying to scramble to figure out what to do after an event. And I've never sold an insurance policy in my life. I have no financial interest in this, but it's just so, I've interacted with communities all over the country over the years with this, and you know how upsetting it is when you can't really do something for someone. Having access to flood insurance to have any money there. And I know you deal with a lot of the rental community, that gets forgotten completely because there is no federal mandate. Landlords may have to have it if they have their property, but very few landlords tell their renters that it's even available. Little technical, this stuff, so where the required, I'm sure you've had many people complain over the years of they're in the floodplain, out of the floodplain. The floodplain, we've gotten away from saying the 1 in 100 year event because everyone's like, my mortgage is only 30 years, I'm good. It's 1% chance of any given year. So it's really more likely in the course of your mortgage than 1 in 100. And plus, who's 100 years old? So required federal statute, but encouraged heartily. And I just can't, encouraged heartily for anyone who has ever had rain in the forecast for their home. If you've never had rain in the forecast, maybe you don't need to consider flood insurance. As we saw after Harvey, and as many of you had to deal with after Harvey, that 1% thing and the maps that FEMA puts out, we'll talk about those in a minute, are great. They're a good guide, but they are not absolute. And that line of in and out of the special flood hazard area oftentimes goes down the street. So you have people on one side of the street have to have it, people on the other side of the street don't have to have it, and you're going to tell me that water knows that that line is there? So even people who don't have to have it are encouraged. The other side is if it is voluntary, if you don't have to have it, your rates can be quite reasonable. Where's our friend from Baton Rouge who was talking about her mother? So she flood insurance policy, $400 a year. $400 a year is real money, but $400 a year to have your house back afterwards is a big deal. And there's a preferred risk policy, which is our lowest rate, and you could be down into the low $200 realm. And I know that's not affordable for every household, but it's something that's definitely needs to be talked about while we're doing disaster recovery, but also as we're doing disaster preparedness, because we can only do so much mitigation. Certainly individuals can only do so much mitigation. Communities are getting better at it. I don't know that they're getting better at it fast enough if we see some of the flooding events. This is not my space. I'm not a disaster relief person, but the maximum amount that FEMA can provide in individual assistance, is, not everyone gets there. It's $34,000. That's oftentimes much less than 10. And people, I can't say that I've ever heard someone be dumb enough to say to the insurance guy, but a lot, we are told that there are communities that are of the belief that if there's an event, the federal government will bail them out, and they think, and what bail them out is this individual assistance, which after a federal, all the details, federally declared emergency or anything else, you got to check a lot of boxes. There's a lot of flooding events that do not fall in that category. So it's something just to talk to people about. I'm not asking you to sell insurance, but if it can be in your presentations. And it is fairly easy to access. We'll talk about that. Now, what I was talking about earlier, the odd bit about this program or about insurance, usually you buy insurance, your insurer figures out what your risk is, if you smoke, those sorts of things, but they don't tell you not to smoke. They just tell you if you smoke, you're going to pay this much more. This is a circumstance where for the communities to participate, and they're 22,000 plus of them, like I mentioned, they have to enforce certain building codes. It's the only federal function we have like this. We're a very states, local rights, but it's the only way we've found to be able to get communities to enforce this, and it was a well-designed, like, carrot and stick encouragement. The other thing that comes out of it, and it's such a strangeness, because this program was created in the 60s as it was, it's also ended up to become the source of a lot of local communities' information for development, for land use, and to how to do disaster resilience preparedness, which is kind of strange. And I think that probably sounds like the function of a federal government, but not through the carrot and stick of an insurance policy. I think it's something that, we need the information, but because of the history of this, a lot of the information all of your communities have about the flood risk and resiliency planning comes out of this insurance program that was the brainchild of then Majority Leader Hale Boggs, whose daughter Koki we just lost recently. But so the Boggs family has been involved in the flood space forever, but it was a way to get his answers for Louisiana and for his communities, and it has created a weird world where you would think that a national government would be doing land risk and water management issues for the population just because that's what a government should do. Small government, big government, but that's one of those things that none of us can do by ourselves. We look to government. But because of the history of this, it's kind of trapped in this flood insurance program, and it's trapped at FEMA, and it does sometimes lead to odd outcomes. We can talk. The fun, and where you all probably often interact, yes. The third peg of we talk about a three-peg stool a lot. One of them is insurance, one of them is land risk management, and then there's also the mitigation side. So a lot of mitigation money, as you all know, comes out of the program. There's CBG space and everything else, but there are substantial buyout and mitigation programs that are also funded through this. Again, my personal belief is that should be a function that the federal government as a whole might be paying for, but right now it's paid for by those 5 million policyholders. That's terrible. It's either a $43 or a $63 service charge, federal fee on top of your premium that goes to fund all of these other things. And it's neat that we can do it, but the fact that 5 million people are paying for the risk management stuff for the entire country is an odd outcome. There are those who obviously has been suggestions that we would get away from that. But so a lot of the issues that you'll have to deal with after an event and accessing both post-disaster mitigation, and now there's pre-disaster mitigation money that comes out of that $63 that every policyholder pays is available. And I know, depending on, I think of the communities, it's a slow process and it's a painful process, but there is, the federal government does, through this program, also buy out properties. We call them severe repetitive loss properties. If you've had multiple claims in excess of half the value of the property, your community can reach out and start the process of either mitigating or actually just buying the land out. It's a neat idea to have local communities do that, but you all know mayors and you all know city councils, and buying people out means taking their property tax revenue out of your group as well. So it has not been the best piece of the program. We had a lot of folks after Harvey, now people say this is true, please buy my home. We've been flooded 3 times in Houston and everything else. The program is so clunky that they've gotten their flood insurance check and they're rebuilding before the federal government can say, hey, maybe you shouldn't rebuild. So, something that needs some working. The program has become a monopoly. It didn't mean to become a monopoly. When the program was created, there were private insurers on risk. That is changing. And I know, if you've been doing this for a while, for a long time, the only place to get flood insurance was there. I'm not going to go at length about the private flood insurance market, but the fact that I'm saying private flood insurance market, when I was doing this presentation 10 years ago, there wasn't such a thing. And it's something to keep in mind. All of your state insurance commissioners are prepared, or getting better prepared, to help people find private insurance, sometimes more affordable, oftentimes able to provide better coverage. I don't know how detailed folks are interacting with the flood insurance program, but flood insurance program doesn't cover basements. It's like that. There aren't basements in Louisiana. No one cares. New Jersey cares. So there are opportunities in the private market, and we will see this grow, and I'm happy I'll be around this afternoon if anyone wants to talk about this. But your state insurance commissioners are the source of information about this, and I will be with all of them this weekend in Austin, and they are excited about finally being able to do something for the residents of their states in the flood space. For 50 years, state insurance commissioners were helpless in the space. They didn't regulate the program. They had no understanding, and they had no leverage in the space. So the state insurance commissioners who look out for their constituents on a consumer protection basis on all other lines of insurance are now finally being able to do some of the fairness activities that they do in the auto market and the homeowners market. And they're able to start doing this in the private flood insurance market. I am much more of an interactive speaker. I can talk about the National Flood Insurance Program longer than you can stay awake. But, well, yes, I didn't bring it, but I still do have the transmittal document from President Johnson to the Congress, and I'm a great big flood nerd. But with that base information, I wanted to see if people wanted to start having a conversation. Ooh, there we go. Do I see any hands? Actually, I don't. It's kind of hard to see in this room. Okay, someone's going to make up a question to get this rolling. Okay, I've got a friend from Louisiana whose mom has a policy. What was the most challenging part of interacting with the National Flood Insurance Program?
Carol.
Baton Rouge?
Carol. What's been the most
You're gonna regret coming up to say hi to me, aren't you?
So Carol, you've been asked what's the most challenging part about interacting with the National Flood Insurance Program on behalf of your mother?
Yeah, all right. I do have a little PTSD going through the application for the flood insurance. First of all, just interacting with the adjuster. I think, it's kind of the pick of the draw. When a whole community floods, you hear stories of other people having adjusters, and they're all different about how they look at things and assess the damages and level of loss and what they will pay for and what they won't pay for. So that's number one. Number two is then documenting the personal property, the contents. It was a kind of a secondary trauma, I guess you call it, because I had to go through every picture that we took of her house and look at every item that she lost and think about it and how much it cost or how much it would cost to replace. And do I want to do that? So, I probably left some money on the table, but it was, I got through the big stuff, but, that was a real challenge for me.
I love your mother. The fact that she had a contents policy is great.
Oh,
Like I said earlier, there's $250 available for the property, but then $100,000 of contents cover.
Right.
And sometimes, you're not required to have that in the mortgage. But it's not much use when you have your house back in there and the contents are gone. So
right.
Right. I'm a big fan of your mom's. Not met her, but.
I'll give her address. You can send her a card.
So one of the things that you highlighted, and this is now I'm going to go into just insurance nerd, and most of your state insurance commissioners, when disaster season starts, depending on when your disaster season is it California before hurricane season, I will bet that half of your state insurance commissioners have a video or something on their website that says how to get ready for an insurance claim. And I know no one likes to do this stuff, but very good that you were looking at pictures. The recommendation is that once you're settled in your home, take a video of everything. Take the video with you when you leave and the house floods, but the opportunity, and that's for homeowners as well. Most of this stuff is equally applicable. We're just the weird country that has separated flood out of homeowners. These are all things that, and again, this is not the sexy side of disaster prevention or resilience, but knowing what you own, having an idea of the value, Doesn't mean you need to sit down and have a list all the time. Hopefully you're not going to be accessing that. But that's, again, without even looking, I can tell you that at least half of your state insurance commissioners and the territories, I know there's some people here from the Virgin Islands, and that, the insurance department has been very aggressive and well, it's been a difficult couple of years. But without the insurance department, without your insurance consumers being protected by a state official, I don't know how we would get on the other side of this. I was talking to some of the state insurance commissioners I'll be seeing this weekend, and they were fascinated. They didn't know Catholic Charities. They didn't know this existed. And I'm like, okay, well, we need to figure out how to get state insurance commissioners interacting with people who are actually doing some of the disaster preparedness stuff. And I know, and when there is an event, FEMA hits the ground, state insurance commissioner hit the ground, obviously you and your colleagues hit the ground, and having those relationships and having the understanding in advance is, it's preparedness. Okay, I can only pick on so many people.
I got one right here, Tom. Sorry. Okay, Tom, you're doing a great job. So you're a flood nerd, and we're from Louisiana, so we should be best friends. So South Louisiana. I've got a question. I know you've been doing this for a long time, and I know that you're not an insurance salesman, but where in America, in your opinion, has the most need for being insurance policyholders, but has the lowest amount of insurance policyholders?
Not Louisiana. No, Louisianans, the people in Louisiana understand how the program works. They understand. They're not always happy with it, but they understand it. I would say that the Northeast is least ready. We saw that with Sandy. The storms don't get there very often, but when they do, I would think mathematically, the Southeast, just because of the requirements, and you see there's 1.3, 1.4 million policies in Florida. I remind people, if you choose to live on a sandbar in the Atlantic, you probably need insurance. But where the challenge is, and you obviously, I love winning this argument. People will talk about how come we're subsidizing fat cats who live on the shore, and I've got in-laws in Metairie, and I was like, the stevedores that run the Port of New Orleans have to live somewhere, and they don't live in the Garden District. They live in low-lying areas, and the stevedores, the Port of New Orleans, get the grain out of the whole middle of the country. So don't you come complain to me that you've got to be, there's a flood insurance program, and it might even be in a little bit of debt. If you're a farmer, any place in the Mississippi Basin, likelihood the stevedores, the Port of New Orleans, who need to live someplace, have to have flood insurance and have to be able to rebuild quickly afterwards so that we can keep a national economy going. I love that argument because no one's gonna say the stevedores in the Port of New Orleans are fat, but they're my favorite example. And we go over and over again. There's good information. The Wharton Risk Management Program and actually Pew have done some wonderful studies. And the National Flood Insurance Program and FEMA, as we're looking at affordability options, the median income in the special flood hazard areas, the things I was talking about, by zip code is frequently, the people required to have flood insurance are frequently below the average income, sometimes substantially below the average income of their area. So yes, there are beach houses, but oftentimes those people have to buy more than $250,000 worth of insurance. I'm not saying that there aren't people taking advantage of the program, but this is really a fair housing program. It's the only way, let me tell you. Barney Frank does not like talking about insurance, but he likes talking about fair and affordable housing. And so when I brought the nexus together, he still walked away from me, but it's one of the things where I was able to get, and now the chairwoman of the Financial Services Committee, Maxine Waters, great name for a flood insurance lady. Yeah. Oh no, it's great. But she was, she got involved in this issue after Katrina, and everyone's like, what is Maxine Waters' district in Los Angeles? If they have a river, it's on cement. What's the issue? Maxine was asked to handle this because it was her responsibility, and now the chairwoman has been dealing with this for a dozen years and knows the program inside out and backwards. But she doesn't do it because she likes me. or she likes insurance companies. She does it because she understands that the majority of the folks who are participating in the program are actually below the median income area. So, I'll go make sure I will get you an answer. I just need to look at, I'll just, because I mean, it's just easy math. It's how many policies should there be? How many policies are there? And even with the private market, we're probably at 7-8 million policies. There's good new studies out from some of the modeling companies that there should be 40 or 50 million policies in the country. So I have to remind my more business-minded insurance colleagues that you're not competing with the National Flood Insurance Program. We need to grow both things. We need just more people. But that's a good question. Ma'am.
I don't necessarily know if this is a question. It's really a gripe, but I will start off positive. My mom had flood insurance. She had a positive experience. So, that's the positive side. But for me, I'm having to pay flood insurance, and I'm one of those people who may not be, I'm not below poverty, but, having to kick out $1,200 at one time is a lot. Like, it's no policy that says, okay, girl, we're going to divide this into 6 months, and we're going to work with you. No, it's like, let me get this $1,200 right now, and that's not, why wouldn't they, even work with you on?
I didn't hear where you're from. Doesn't matter.
I'm from Lumberton, North Carolina.
Okay. Help me with my North Carolina geography. Up, down, east, west.
Closer to South Carolina, but more east.
Okay.
So I'm maybe 50 miles from Myrtle Beach.
Okay.
And I have been flooded out twice.
Okay. The answer, this is terrible, and I will be able, everyone here is able to call me going forward. I can almost always explain something about the program. I can't always solve it. So members of Congress will call, like, Tom, we know you can't fix it, but why is this happening this way? That policy is designed so people do not look at the forecasts and the hurricanes in the Gulf and go buy a flood insurance policy for a month and then drop it. That's the policy reason behind it. I was telling Zach earlier, the National Flood Insurance is a souped-up, awesome 1978 Cutlass. So a lot of normal business practices that we all expect in the financial services market were not built into this, and Congress is not sufficiently efficient at doing these things. There is legislation that was passed and approved by this president requiring monthly payments. The mechanics of getting it started have been a challenge. What is true, mortgages incepting after January 1, July 1, 2016 are required to escrow flood insurance the way that you escrow your homeowner's insurance. So it's a problem that kind of fixes itself once, but that's only 3 years worth of loan originations. So it is stupid. But I've interacted with the federal government my whole life. I'm not going to say it's always smart. It's another thing, and again, not here to sell anything, but in North Carolina, there is a hardy private flood insurance market growing, and private companies that aren't bound by the federal rules. The reason that you write your own insurer, whoever you interact with, won't do installment payments with you is because the federal government won't let them. You'll also know when you do installment payments for insurance, you pay a couple dollars more. You're basically financing it. There's no financing mechanism there. And again, explain but not help.
Right.
Sorry.
That's why I said it's a little gripe. I didn't.
No, it's completely rational gripe, and people have tried to get at it. We've gone at it two ways. They've told the flood program to develop a monthly payment plan, but then how do there's still a public policy issue of how do you get people to keep a year-long policy when they're only at risk 2 or 3 of those years. It's like, right. You can't, well, yeah, thank God you can now, but the idea of being able to go and just get health insurance after you sneeze does not work for the insurance model for the risk management thing, if only your risks come in. So that's the public policy answer, and see, I can nerd out, didn't you know? That was a longer answer than you needed. If you want, your state insurance commissioner can talk you through how to talk to the private market, and I can too. Sir?
We're from the upper Midwest Great Plains. This year we have a 40-inch rainfall. It's an all-time record for the year. How does this parallel the federal crop insurance program? Is it something, now, my understanding is we would get this through our agent. So I would go to State Farm and I would add flood insurance and it would be underwritten by this. Is that
State
correct?
Farm dropped out of the program, actually, but yes, you would go to your agent, and your agent would. 2010, 2012. Yeah, State Farm will aim you. Well, there is a, again, if no one envisioned this as a launch, did they? There is a portion of the National Flood Insurance Program that is directly administered by the federal government. It's referred to as the direct program. And basically, State Farm dumped all of their policies. I'm not speaking negatively, but they made a business decision that participating in the program wasn't business-wise for them, both on reputation risk and what the revenue produced from it was. So State Farm itself will not write it, but they will get you to someone who will.
So we have all these basements, flooded homes with caved in, and obviously in high plains areas, not a lot of people had flood insurance. So
No.
we need to re-educate, because what you're saying is it's a good deal in the long run, and we've already had a 1,000-year flood and a 500-year flood and a 100-year flood in different parts of Minnesota in the last 10 years. So we're climate change savvy.
Well, no, and that's the
So the bottom line is, are there other companies that we should be referring folks to, whether it be American Family or Liberty, or how does that work?
both
Or
of those
where
are
do they go for the direct?
both of those are participating communities. If you send people to the Flood Smart website, the list of their statutorily named write your own insurance companies, and these companies administer the program for the federal government. They've been doing it since 1983, when the federal government for a while there was trying to do this all by itself and realized that it wasn't an insurance company. So we have a sense of how this has gone. In 2007, 2008, there were probably 90 insurers participating in this because of the value proposition and because they want to be able to provide that to their policyholders. We are down to 53. So even insurance companies are backing away from the interaction with the federal government part of this. But floodsmart.com, I will, your state insurance commissioner in Minnesota or Wisconsin will happily guide you. I'm sorry, go ahead.
Just one other thing. The longshoremen show up to load the boat. They have a contract for 8 guys to hold the rope. You and I could hold the rope. So instead, you might talk about the tens of thousands of farmers with net worths in excess of $1 million who appreciated the federal crop insurance program to the extent of 40% of the corn crop in South Dakota wasn't planted, and those who were farm owners did as well as they might have with a crop with average. I mean, they didn't lose money per acre. So there's an awful lot of parallel subsidy to much higher income people in that bracket with a federal program, and so we might move some of our lower income people to think about flood insurance like the farmer's crop insurance. That is a wonderful nexus. It hasn't been drawn, right down to the fact that different committees in Congress manage the two programs. The Agriculture Committee handles all of the stuff that is crop insurance, and the Financial Services Committee. So they don't even the policymakers for those two things don't talk to each other, but they're completely, they make sense together. They certainly, it was horrible to see what happened last season in Nebraska, but fortunately, a lot of it was crop and not property, so more people were made whole through the crop program, even though it was flooding, or there was actually ice moving across the ground in Nebraska. But thank you. And I'm sorry you happened to pick State Farm as the one that dropped out. But
Tom, quick question here. Could you do a little forecast as we look ahead and where we might see NFIP going in the future, particularly around as you've kind of hinted at, most of our folks are interacting with folks who are lower income. We have a preferential option for the poor. We definitely have a vested interest in subsidized rates, but there also seems to be this push for actuarially sound rates as moving forward. Where do you see all this landing, and what can we do to be a part of that process as a network?
Didn't I tell you I was happy to not be in Washington today? So the National Flood Insurance Program is reauthorized on a regular basis, just straight reauthorization, so Congress can keep its fingers in it. We were supposed to reauthorize September 30, 2017, and since then we've just done 90-day short reauthorizations because of the very issues that Zach is bringing forward. You've got people in coastal communities and talking about affordability. You have more conservative are concerned about the cost space, and getting the two together has just, as we're now 2 years and a month beyond, and it's bottom line is, if something's not broken in Washington, no one pays attention to it. And because this is kind of hobbling along, where we're headed, the affordability space, the first time ever in 2012, Congresswoman, then ranking member Maxine Waters, included affordability issues in the bill that was then the Biggert-Waters bill, and everyone not in the scene. So Judy Biggert is no longer in Congress, but the numbers of times people have talked to me about the bigger waters. I'm like, we're not trying to get bigger waters. So there is, affordability is becoming an increasing conversation, but how you get there is a challenge because, like I said, this program's already paying for mapping, mitigation, disaster preparedness. So there's no income stream related to that. There's legislation that passed the House this summer, as you probably might know, includes a pilot program on affordability and really looking at communities. And then there's the Menendez-Kennedy legislation I talked about also has that, looking at medium income, talking about getting to a means-tested program. There's a lot of, as we know with the ACA, there's a lot of challenges with doing a means-tested program, but the conversation is there. As to rating and rating accuracy, and I haven't had anyone stand up and talk about the $3,000 policies that pop up every now and then, so that's been good. Those are hard to deal with. Like I said, this is a really fancy 1978 cutlass. So the rating program that they have had since 1978 was designed to get people in. So these great big zones, and it's not individual underwriting. FEMA is in a process of developing a more focused underwriting ability, and it's interesting. God, I love Congress this way. Some of the same people that have been yelling, we want more individualized underwriting, 40 of them just sent a letter to the speaker saying, we got to stop this new risk rating 2.0 is what they're calling it, because it might increase my constituents' rates. And I was like, well, if it increases your constituents' rates concomitant with the risk, if you're concerned about fiscal responsibility, you shouldn't be concerned. So Congress is not the best place to do this type of policymaking. But what is neat, and insurance future world, who didn't watch football last Thursday? How many auto insurance ads did you see during the game? At least 3, probably 6. Getting a private market developed, and I'm not here to sell flood insurance, but getting a private market developed can get us closer to real risk rating, and then you get companies competing with each other, and we're finally seeing, and I hope it continues as a trend after a couple of years of spike up, the ACA and the regularity of the product is, we've seen health insurance premiums coming down now that the ACA is maturing into its space. So that's 15 years away. Advice and advocacy to support. Getting to your members of Congress and reminding them that this is a priority. There are a lot of priorities, but getting to your members of Congress, reminding this is a priority, having a couple of pieces, obviously talking about it, means testing makes a great deal of sense. People should be able to afford coverage that covers their home. A private company can't cover them. So the federal government has a role here. So really, talking to your members of Congress, just making, we've gone from 8, 10 members of Congress that actually understood and were paying attention to this to 30 or 40. Makes my life harder, but it's helpful. And I'm happy to work, if you want to put together just some basic talking points, where, the means testing, risk rating 2.0 is a really nerdy concept, but just kind of, I would, loved that 1978 Cutlass when it got people into the program. But now we need a new rating methodology, and that's really difficult to get a member of Congress to even give a darn, because their question is, how many of my constituents' rates are going to go up or down, and until I see that number, I don't care if it's fair or not. The National Association of Realtors polled 3,000 or 6,000 realtors talking about this, what they thought, and the really basic questions. I'm not picking on Louisiana, I promise. But basic questions. Realtors around the country. There was a time that realtors didn't want to tell anyone that they had flood insurance for property because they didn't want to screw up a sale, or they didn't want to increase. Now realtors are getting better, but the survey numbers came back. The questions were like, should flood insurance rates be tied directly to risk? And the only state that came out with the majority of the agents saying no was Louisiana. But
we got one here.
Just quickly, I think you may have covered the question I had, is the coordination between FEMA and the National Flood Insurance Program. I'm South Louisiana, and one of the things that we're dealing with there is that are looking at the amount of the maximum for home repairs or replacement, the $250,000. That doesn't cover sometimes a lot of the homes that we're dealing with, even though they had flood insurance, because when they first purchased or built their homes, they built them in non-flood related areas, and we're talking about homes that are going up to the $1 million to $500,000 range, and then they're having to purchase flood insurance now because FEMA changed the flood maps that put them in a designated flood area. So they're having to buy flood insurance that only covers up to $250,000, which will not cover the total repairs which we dealt with the 2016 flood. And so is there some coordination looking at situations like that? Because the more area they're putting under the floodplains and what have you, which are good because, you got to be aware of it, but also it's not giving the amount of coverage that the homeowner actually needs, which they're required to have now, which is another cost that they're having to deal with.
Your Senator, John Kennedy, as well as your Insurance Commissioner, Jim Donnellan, are all about this issue. They have put forward legislation increasing. We haven't lifted that $250,000 cap. That was the jumbo loan amount in 1994. And when they put that in, so figuring we want to have people have insurance for everything we're guaranteeing through HUD, through everything else. So that $250,000 has been trapped there forever. Very true. There are those who do not like the federal government being involved in the insurance program that have kept that number, and they will fight and fight and fight and not increase it. But there are the people who are actually paying attention and realize, you can't go very far with $250,000 on a home in New Jersey either. That's what Senator Menendez says. There's strong pushback from folks who just don't believe the federal government belongs in this space. There has always been private insurance available above $250,000. It's always been there. Insurance gets less expensive as you get higher dollars. If you're an insurer, you're more likely to pay if there is a $50,000 claim. But if your liability doesn't come in until $250,000, it's excess insurance, we call it. So most of the people who sell that excess insurance require that you have that $250,000 first layer. And I used to tease when I was younger and maybe ambitious. I'm like, I'm just going to go sell excess flood because it very rarely gets there. That was 15 years ago. Home values, the cost of rebuilding has gotten up, and those numbers aren't as crazy as they, like I said, it was the jumbo loan number in 1994. But you at least have some of the most effective advocates in the country on your side with this.
Right. Join me in thanking
sir.
Well done.
Thank you. Good group.
Kim, you want to come on up and lead us in our next activity?
Hunt me down.
So in July, a couple years ago, I woke up only to find that my front yard had turned into lakeside property. You know, I had a full water view. It was great. I've always wanted a water view, and there it was in my front yard. I actually live on a hill, and did not expect that lakefront property there. My house actually is just up the street from the video we saw yesterday in Ellicott City, where all that water was rushing through the town. So the damage started at the bottom of my street and went from there. The next day, I purchased flood insurance. Okay, so we have a couple things this afternoon. Thank you very much, Tom. Appreciate you coming this way, and will you be around for a little bit for people that?
I will be around for the rest of the afternoon. With the time, I'm happy to answer questions. If you want to ask them in the group, I'm happy. I get a lot of during.
Great, so absolutely. He'll be around for the rest of the afternoon if you're interested in connecting more. All right, just to switch a little bit, let's see. Has folks read this little pamphlet that was in their packages when they arrived? You've seen on the app and in different places that Empowered has been a sponsor of Catholic Charities AIDE 2019, and we're very excited about that. This is the first time that we've had this opportunity with Empowered, and if you haven't read what they have these amazing solar lights that, when you lose electricity, become something that is really handy to have. They also charge your cell phone, which is even better for those of us in this business that absolutely always need that kind of connectivity. So what's really exciting is that, you know, a couple of the places that really lose electricity a lot are our U.S. territories. We do lose it in the United States, obviously, but our U.S. territories really lose electricity a lot. I myself deployed during Hurricane Maria down to Puerto Rico for 2 months, and the first month I didn't have a thing. It was like camping with the door closed, you know. There was nothing. And you just can't imagine, if you're not in a safe environment, how that would feel. So Empowered has been generous and would like to donate a few of those lights to our folks in the U.S. territories. So is there someone here from the Virgin Islands that can come on up? Did they? Come on, Fernando. And where are the ladies from Saipan? Come on up. So we have packages for you. Let me just show you. Come on up, I'll show you what this thing does. It's really cool. He's trying to tuck in his shirt on his way up. Okay, so these actually are inflatable solar lights, okay? You have a button up here to turn it on, but it has different modes. So that's one mode. Oh, let's see. 2 modes, see it getting lighter, and then the brightest. And then this is what I call having fun with no electricity. You could do it like concert mode, you know, blinking, etc. And up top here, there is a charger for your cell phone, okay? And it's all inflatable. So when you're done, you can close it back up. LJ over here was telling me that you can charge it on the cell phone or the solar panel, and then store it. It loses about 7% energy a month, so you can keep it for a few months fully charged or charged at some level. So, Empowered has provided, let's see, we've got solar lights here for U.S. Virgin Islands.
Thank you.
And 4 side pans. Thank you. I really want to call up LJ, who is an employee of Empowered, to just say a couple words. LJ? God, you can go.
Hello, everyone. So apologies for being the millennial that reads from his phone, but I just found out I'd be speaking about 20 minutes ago, so you have to bear with me a little bit here. But as Kim mentioned, my name is LJ, and I am with Empowered here today. I want to start by giving a quick shout out to Kim, Inga, and the whole Catholic Charities team. You've been incredibly welcoming and warm in your reception, inviting me here today, and I think that's very reflective of your organization and the work you do as a whole. So thank you, and brown nosing check. So a little bit about my company, Empowered, and the work that we do. So we are a B Corp and benefit corporation with the goal of providing reusable and sustainable energy to those around the world in need. And when we say, those in need, it can be anyone ranging from a child growing up in an emerging market without electricity who just wants to study a little later at night, to a family affected by a disaster who has no electricity and is in desperate need of light. So something like reliable, clean energy, we feel that is a right, not a privilege. So it is our goal to try and, empower as many of them as possible, hence the name Empowered. But, as helpful and as needed as a product such as our Lucy Light may be, it doesn't do anyone any good just by sitting on the shelf at a warehouse. So it's because of, the necessary grunt work, for lack of a better term, done by, those of you in this room, deploying our lights, in the right situations during what may be the worst of times, that we're able to accomplish this mission. So again, I want to say thank you. It's a privilege and an honor to be working alongside you. On behalf of Empowered, we thank you, and we look forward to effecting more positive change in unavoidably negative circumstances now and in the future. So thank you.
Okay, just a couple, I should start off by saying, there is, if you look under your chair, there should be one chair at the table in the front. If you reach down, there should be a blue tape with a star on it. If you're the one that finds that blue tape with a star on it, then you are to see Zach in the back of the room, and you will get an Empowered light. They're all excited, LJ. Now, don't all rush from it once. Yep, did you get one? Okay, so then if you find one like this, Yep, it should be a piece of tape. Yep, like that. Yep, you find a blue piece of tape, star on it. What you're gonna do, everyone listen. They're all going for the vacant tables. If you find your tape with a star on it, you're gonna take it over to Zach, and he's going to give you your light. Okay? Thank you. Thank you. All right. A couple other announcements before we break for the afternoon. Jane Crady, some of you had her as a presenter yesterday. Hey, folks, over there, listen up. Jane Crady, who some of you had for workshops yesterday, had a family emergency and had to leave. So please keep her in your thoughts and prayers. She does have a session this afternoon, which will now be conducted by Carol Spruill from Baton Rouge. Yay! Carol's been a presenter on our team from time to time, so we're very happy that she's here and offered to do that. Please remember that there is no served dinner tonight. Again, this is one of those feedbacks from the evaluation that folks wanted a free night to go out and be with their staff, to be with friends, and so tonight is your free night. So go out and have a good time, but just remember that breakfast tomorrow morning is at 8 o'clock, just like today. Mass is at 7:30. And so you should be back for that. Don't stay out all night. There is the community of practice meeting. For those that didn't attend yesterday, please attend today. Is, I believe, still in ballroom 4, which is right next door where we had the reception on the first night. The community of practice meeting is from 4:45 to 5:45. And then finally, earlier in the week, Anita Hassel, the executive director here, had passed out little sheets about the Bethlehem Marketplace that's happening in the Cathedral District here tonight. If you want to do that before you go to dinner, Simona has put something out on the app for you. And that starts at from 5:30, ends at 8:30. So thank you very much. Enjoy your afternoon session, and then dinner tonight. Just come home before 6 a.m. Thank you.